All right, welcome to the 301 Club.
Welcome,
We're going
welcome.
to give you the one-on-one on building wealth in your 20s through real estate.
Yes, sir.
Today we have a very special episode
Yep.
because we're talking about landlord and rental tenant relationship. So if you buy a house, you can either sell it and make a profit off of your house that way, or you can go the route that me and John are going, which is to rent it out. And this is going to require you to follow certain types of laws and also understand how the market kind of works. And so we're going to jump into some fun facts that we actually took a class at our local community college, which is something that we suggest because this is a way to continue your education, especially at the stage that John and I are at, where we have a little bit of knowledge, which we've shared before with you all. But now we're trying to get into the nitty gritty of the law, especially in the Montgomery County and the DC area, which is where we're located. Shout out 20886.
Yep.
And basically,
So I guess it just depends on like where you're located at. There are different like laws, regulations, things you have to like, tune into so that you take the right steps and you do your due diligence when it comes to renting. Like for example, I know you're gonna get into it. Is like having a license to rent out to people. So that's one thing to
yeah, man.
keep
So
in mind.
we're going to jump in and out of specific MoCo laws and then just general laws and just some fun facts. So let's go into the fun facts. So in general, when people stop buying houses, the rental market is actually going to go up, and that's going to depend about the economics of the environment. And also in this county specifically, the inventory has been low for the last couple of years. And so what's happening is that the rents are going up and, landlords are raising rents. And so it's kind of pushing people into buying homes. It was doing this from 2020 to 2022. However, now it's kind of switching back to a buyer's market because the interest rate is increasing so much and it's more expensive to borrow money. And so one route you can take is you can buy a house and then you can basically have a 1-to-1 return, meaning that if you buy a house and your mortgage is like $2,000, whatever, you can rent it out for about $2,000. And this is the first fun fact, which is this is kind of how it's going to work in almost all cases. You're only going to come away with like about 100, 200, 300 if you're doing this the right way and you do your numbers correctly. So the main point is the rental game is like a long-term game, whereas buying and selling a house and flipping them is kind of short-term, but you need
More capital, I'd say.
exactly. You got it.
Yeah.
And so one way that you can do this, buying a house and then selling it, is through a 1031 exchange, which is, it's a federal tax code, and it helps you to not be charged transfer taxes when you're selling a house within 30 days. And then, but you also have to have a mediary. That's the law. And
Yeah,
also
it's title company usually.
there you go.
Yeah.
Exactly. And so, so specifically in MoCo, if you were not to do a 1031 exchange and you were to sell a house, if it's over $400,000, the seller is going to have to pay 1.45%, and the buyer is going to have to pay 1.45% of transfer taxes. However, for in our situation,
Under 400.
our house was under 400, so only the seller did. So we didn't have to pay that for our house here.
Right. Yeah, definitely. And I know like you were gonna get into the titles and like there's different like I know we got into it earlier in the episodes we've already previously recorded. I'm sure you'll be able to find that. So we had like a little conversation about the titles. I know you wanted to get into that a little bit.
Yeah, we talk about, tenants in entirety we've talked about versus joint tenants. And the main difference between these two is if you're going to be a married couple or not. And there's different advantages, emotional and financial advantages to buy as a married couple or as a business partner.
So I have a little bit of information here when it comes to, being a married couple and whatnot, and just a little like get a little bit into that. So it's like if you have if you're in a relationship, you're either married more often than not. If that is the case, there is options like if you were to get a loan on your own versus getting a joint loan. And regardless of this though, for the loan part, you can include someone on the title. They don't necessarily have to be on the loan. But that's like up to the party, both parties. And so there is a misconception that your credit might be affected. Let's say one of the parties' credit isn't the best, one does. There are two standalone things. Unless you do go on a joint loan, And in those cases, there might be like interest rates that might be affected depending on what the credit scores are. But in general, like you can get your own loan. Like one of the parties can get their own loan, and if they do that, they'd have to like qualify on their own and make sure that they have the income and they're able to afford their own mortgage on their own, and do it that way. And that's more often than not, it's probably the better option versus including someone else. Just there's a lot of variables, so it's good to make sure that there's communication. There's like that you run the numbers, see which one is the better option. But there is that option, so people understand that let's say there's one of the parties, they can afford to actually pay the mortgage on their own. Maybe it's better to get it in their name so that their credit score is affected, and it's just their credit score that gets affected and the other person doesn't get affected. But if you're going for if you're like, let's say, I know this may be the case for some people, maybe they're not interested in getting into the real estate business. Maybe they just get a joint loan and they take that hit on maybe if they get lucky and both credit scores are amazing, boom, perfect. They can do a joint loan and get a bigger loan. So that's the one positive of getting a joint loan is maybe you have you combine the incomes and they're both really good incomes. They're both really good credit scores. Ideally, that would give you like the max amount of loan that you could get between the two. And more often than not, that's more than the individual's ability. It's more than the individual's max like loan amount. So like that is a good idea to keep in mind. But those conversations have to happen. Credit score, income, who wants to take the hit, or do we want to get into the real estate business? So those are just things to keep in mind when it comes to being married, or you're in a relationship and you guys are thinking about getting a house, or getting into the industry, working together. So those conversations have to happen. And I think it's something definitely to think about, and it can definitely help you long term. If just keeping those things in mind.
Yeah, and so once you've just got this decided who's going to be on the loan, who's going to be on the title, now you got to start worrying about your tenants, right? So the first thing that we want to kind of mention is you want to make sure that this person doesn't have any criminal activity background. And one thing that's going to be, the elephant in the room is sometimes if you notice that there's some criminal activity from your tenants, you can just ask them, because there's really no law that is currently in place right now that protects tenants from, if they have a criminal history, that you can say that they cannot live there, or you can have them evicted because of this. But you also you need to have proof, obviously, because that's proof that's a given, that you're going to need to know that they're doing this, and then just ask them. And if they say no, then it's a little bit trickier situation. You have to go to court. But to
when
keep going,
it comes to criminal backgrounds.
Yeah, that's just specifically criminal background stuff, which I'm I'm putting that out there as like the first thing you want to kind of notice. And then the other thing is like there's workarounds if they're doing criminal activity, or if they're breaking your place or doing things that they're not supposed to be doing. Actually, you can charge them up to $250 a year at $50 increments if they do not meet certain lease requirements. Like, for example, you can put in your lease, again, no criminal activity, or you can also put replace the water filter. There's a whole range of how it can work. And then also you can make sure that they have the snow removed within 24 to 48 hours. And if they break any of these lease agreements, then you have the right to remove them. So yeah, what you really want to be focused on what's in the contract. Another thing about it, another side topic on a fun fact is the additional dwelling unit. And this is going to happen when you have tenants already, and then you want to maybe add another additional structure maybe on top of your building, or maybe build something in the backyard. But you really have to check your zoning laws for this.
Yeah, and if you're part of an HOA, probably check that too, if they allow modifying the structure and whatnot. So
yeah, but these are very popular these days. But again, make sure that you have in your written lease agreement that you notify this person that this is an additional dwelling unit, and that it has all the necessary supplies, because you have to put that again in your lease to let them know, hey, it has water, it has electricity, it has all the things that you're expecting it to have. And
right.
Then, so now
definitely, they just making sure people understand that that's like an important thing to keep in mind.
Yeah, and like so the next thing about kind of a theme of the rest of this podcast is going to be, the idea that tenants have a lot stronger rights when it comes to landlord-tenant relationship. So, for example, we just talked about, denying someone a loan, denying someone tenancy based off of their background, for example. Another thing is if they're a Section 8 tenant, you can't actually discriminate based off of this, and it's actually you don't really want to, because Section 8 means that they're getting money from the government to pay their rent, so you're going to get an automatic payment from them, and it's a for sure payment, because with tenants, if they're not paying a lot, then they have so much more rights and time to like get their finances in order before you can kick them out, and that's going to cost you money in the long run more so.
So it almost makes it seem like they're the better option sometimes. Or well, like rather,
Yeah.
it's more rather. I think what you're trying to say is like it's more consistent, and like the money is coming straight. I'm assuming it's coming straight from
Exactly.
purely assumptions and opinions. I'm assuming it comes from like straight from the government. So
No, that's
that's
true.
probably just like a direct. So yeah, it's good to keep that in mind. So I guess people don't, like obviously never discriminate. Always keep your options open. Do the vetting for every application you get in if you decide to take that route. But I think it's important for people to be standardized about it, having maybe an application or a lease that people sign, and do all those necessary steps, because obviously you don't want to just rent out to some random stranger based on a handshake. That's definitely not the move ever. I think like always have a paper trail, agreement, lease, all that.
Yeah, and I mean, my opinion is there should be a criminal background or protected class, which is you can't discriminate on this. For example, it is up for debate. It's not required in DC and Maryland right now, but Democrats are really pushing for this because there are currently in place things that you are definitely not allowed to discriminate on, which include race, color, background, ancestry, age. And then one thing specific about DC is you can't discriminate based off if they're a student or not. So you can't, if you have two equal people applying for your tenancy in your building, you have to have the same requirements for all. For example, credit score check for all over 18, for example. But if they're students, they might be under 18, then they don't have to qualify for that credit check. That's another loophole behind the scenes. But in DC, that's a loophole you could do in Maryland, but in DC, that you're not allowed to do that, for example.
Right. So it's important for people to keep in mind and do their research on their specific area that they have property in, so that they don't. So they're following the rules and regulations, and they're doing their due diligence, because that's very important, because you don't want to come across a situation where you maybe just like unintentionally happen to like pick someone over somebody else, and then that person goes to sue you.
Yep.
It's just like not the best outcome that you want. So better to do your research and know everything that you need to do as like a landlord, and so that you don't like break any laws or regulations or anything like that, because obviously that's just another headache. So just avoid those things, and do your research.
Exactly. Another specific thing that is dependent on where you live. For example, for Montgomery County, you actually do need a rental license to do rental properties. However, another loophole is in incorporated cities, you do not need one. So, for example, Rockville, Gaithersburg, Tacoma Park. So
Yeah, that's pretty awesome.
But in DC, you
Might
need
get
one.
lucky.
Yeah, so that's the difference there.
Yeah.
And so also getting into making sure your tenant is comfortable. You do have to disclose if there's lead paint in the walls, because technically like it can cause cancer and bad things to young children, if they breathe in the lead paint throughout their life. But the other part of this is that if there's asbestos, it's really not a big deal unless the asbestos is like broken, because you can breathe in the asbestos and then it can cause complications also. However, all you really have to do is provide disclosure that this exists in the house, and then the tenant actually has to pay for the inspection, and then they can report that back to you, and then that's a whole nother court case going in there. So that's just another process along to now you have a lease. And one thing that I want to bring up is that I would not text a lease, because technically the law says that it has to be in writing, but again, this is going to depend on your court system and if this actually comes up, or if the tenant you have an issue with your tenant on the lease. But make sure that it's in written documents, and that you at least offer them a 2-year lease, especially at least in Montgomery County. You have to give them an offer of a 2-year lease, or you can do anything below that. But I mean, there's differences, but from the business perspective, you might want to, it can be strategic depending on what you're trying to do with the tenant.
Yeah, definitely. I mean, ideally you want to like go for a longer lease if you can offer, and you can kind of, if you're, the numbers just have to be right. And, if you can afford to dock off a few $100s for a better deal for like, let's say a 2-year, I'm sure this is like completely above board where it's like you offer a deal. Hey, you want to do we have 2-year lease available. I'll offer you a deal on the rent, knock off maybe 100 or two, whatever it may be, whatever is like within your budget and according to your numbers. If you're able to do that, it's probably the better option to go long term, because if you decide to, like, let's say, invest somewhere else, you might need to show up to the bank and be like, hey, listen, I know I own this spot, but I have someone here locked in for 2 years, 3 years, however many years. Because I don't know if there's a limit on it, but I know in DC they have like long-term leases. We had a friend that was locked in for, I think, a 2 or may have been more than a 2-year lease. So these are just options to remember. They can work in the landlord's favor, working these leases options out and kind of making sure that they do their due diligence and maybe crunch the numbers, offer better deals. But yeah, long story short, better to do a long-term lease if possible as a landlord.
Yeah, from a business perspective.
Yeah, from a business perspective. Yeah.
So from the legal's perspective, you also are going to, combine business and legal and talk about security deposits, right? Because this is protecting you as a landlord. If they break something, you have 45 days to inspect the building after the tenants leave. So, but the law is that you cannot charge more than 2 months of rent in Montgomery County for a security deposit. So if your deposit is, if your rent is $1,000, you can't charge more than $2,000 upfront for that you keep, but you have to have it held in a interest-bearing account actually in Montgomery County. But
wow.
Yeah,
so
it's like, tied to the U.S. Treasury yield curve actually ever since 2015. So that's an interesting side note.
For security,
because you're going to give it back to the tenant at the end of the at the end of the day anyways, and why not hold it, why not have it gain interest? And that's actually now a law. But there is a workaround to this, right? So for example, we talked about students, and this happens in a lot of cases with that. If you're renting out to students and their parents are paying for their living situation, you can require a 1 month security deposit, but the student can pay maybe 6 months in advance as credit. And so that way you can hold the money and then you deduct it every month as their payment towards the rent. So that's a very interesting thing that can happen in both MoCo and DC.
So it's like 2 months versus, they can charge up to 2 months.
So yeah, right. So the law is you can only charge a month as up to 1 month, and that's because it's protecting lower income citizens. But
you can't go over more than 1 month.
No, you can't.
Okay.
So but the law, but that's if you were to put it into the security deposit that I was talking about, that's required by law. So you have to have that, but then on top of that, they can add 6 months of payment and give it to you. You're allowed to hold that, but as you still need that security deposit held separately.
Okay, that makes sense.
And then, so to keep going with security deposits, yeah, basically if they damage anything, if your tenant damages anything, then you can take that from them. And again, this is depending on your court system. You might have to take it to court if the damages are over the security deposit.
Interesting. Yeah, definitely. We've had situations. We lived together at an apartment complex in Gaithersburg, and we did lose some of our security deposit, but it was definitely for small, minor little things, maybe a nick in the wall. Maybe a doorknob that was like came loose, whatever. So it was like little small things, scuffs on the wall. But yeah, so it's interesting. I think as a homeowner, you have to, or a landlord, homeowner, you have to keep those things in mind. So because anything can happen. I mean, we weren't even going crazy at that place. It just happened to maybe moving stuff around will scuff something. Someone might run into the wall, like not necessarily like that, but like. It's like moving chairs around, you might scuff up the wall a little bit. And it's funny enough that one of the door handles didn't really turn. And I remember going in to try to turn it and pull it open and it ended up coming off. So little things like that, it's like, you just can't account for, all things that might happen. So as like a homeowner, landlord, it's a good thing to like, it's at least a 1 month minimum. I don't know if it's like, what's the word for it?
It's a 1 month maximum.
Yeah, it's a 1 month maximum. So it's better to probably do the maximum just to be safe, or just to like make sure that things get covered, by whatever may happen. But yeah, so it's like a good thing to keep in mind. Probably best to do max. Yeah,
so going downhill now, talking about you already have a lease locked in. You've done your due diligence about all the law that we've talked about, following the law. Now you're talking about rent increases, which are still also covered by the law, right? So there actually is no rent cap. So it's very popular to have like a rent cap in like certain cities or municipalities. But in Montgomery County, there is no rent cap, but there's recommendations to follow. And what this is about a 0.4% increase, but it also every year in the rent. But this also follows against inflation. The recommendations change. So as you would imagine, in 2022, the increased percentages have gone up a lot recently, because in the past they've gone up maybe a little bit more slowly. However, there is a rent cap in DC, and that follows the CPI index plus 2%. So that's going to be also different for elderly and disabled. It's only limited to 5%. So we're talking about inflation. If the inflation goes, to 7%, which it has kind of right now recently, plus 2%, it's 9%. It's elderly, no matter if that's the case, the elderly are limited to just a 5% max. So these are the laws you must, again, these are maximum laws, and it's up to you from a business perspective of how you want to handle, if you want to go lower or nothing at all.
Yep, definitely. I think, that's one thing that keeps coming up I've noticed that's reoccurring in this episode is just, location. So understand your location, understand where you're living. Well, obviously, that's the same thing. But what I'm really trying to say is just like understanding the rules and regulations, laws, like Chase just mentioned, rent control. That's something I didn't even know. So it's like I'm learning something new too. So it's just important to keep those things in mind, because you don't want to break any laws or any rules they have when it comes to renting, because it's just a whole nother ordeal that you have to deal with. So best to just cover your bases.
Right. And if you want more information, just go to the Department of Housing and Community Affairs website, and it'll talk about all of the increases like I talked about following inflation, and it'll have all that recommendations and laws there. So another thing is, after your whatever lease amount of time you have with your tenant, 1 year, 2 years, it's actually a good idea to do a month to month maybe after that. And that's also what happened in our case when we were renting. They offered a month to month to us. However, after our lease was done, we were legally allowed to leave without paying a fee to end the lease early. So you talked about our friend in DC. His lease was 3 years. He had to cut it out early because people had moved out. They couldn't afford the rent, but they had to pay a fee because they ended that lease early. However, if you finish the lease, then now you have to go month to month from that point on. And that means that the tenant can leave under certain restrictions in your county. So in DC, they need a 30-day. The tenant needs to give the 30-day notice by law.
Right.
So look at your municipality's rules for that.
Yep.
And then also there's rules when it comes to, like we were just talking about, terminating a lease, right?
Yeah.
So specifically in DC, it's a very interesting story, because a long time ago, how first ladies of presidents, they usually have projects, things like that, that they do. Lady Bird, her project was to beautify DC. So she decided was to take all of the federal buildings, because they were looking really awful, and then refurbish them, for example. But what had happened was that people were living in these buildings, and so what she said is like, okay, you guys have to move out, and then once we're done refurbishing, you can move back in. But this created a law that says now in DC, if you want to kick out a resident to do any type of refurbishment or something like that, you have to allow them to buy the building from you. And this can be a tricky situation, because you are allowed to also put this building, for example, you can refurbish it, put it onto the market. But if you put it on the market for like 30 days, whatever, and then someone offers you, but then like in day 31, and then they end up not being able to finance that situation, then you have to give it back to the person who was already, you have to give the precedence of who can buy that house back to the person who's living with you, who was living with you before as a tenant, right? So it's a very tricky situation. And also another thing about DC is that you can't sublet in DC by law, but in Maryland you can with a lease. So these are another laws that you might want to look into when it comes to when you're ending relationships with your tenant. And then the last thing that we have, anything else, John?
Off the top of my head, yeah, of course.
Statistics.
From what it sounds like, yeah, just making sure you do your research, cover all your bases. It just sounds like really what it takes. You're going to need to spend some time. Like, I think a common misconception of investing into things like this is not just a money thing. You also have to invest time. Make sure you take time to do research. Maybe you have properties in different cities. There might be different municipalities. I think that's what it's called, right? So it's like making sure that you're up to code with when it comes to all your properties, so it's like this is a long game. And for those who are listening that actually want to do this as a full time, or rather do this as an investment option, it's important to keep these things in mind. It's going to be time. It's time and effort, money as well, but more often than not, it's time. So just do your research, cover your bases.
The median age of a new house buyer, is 53 right now, and it actually dropped for the first time in 2020 because, of course, it was really cheap to borrow money. It did that for the first time since 2000. And so what we're trying to say is you don't need to listen to these news articles, because we're here sitting in our house at 26 years old, and don't wait till you're 53 and waste, all of your time to build equity in a home when you can do it right now. So on that note, like and subscribe. 301 Club will teach you how to build wealth in your 20s.
Yes, sir. We're out.